Hello and welcome to Stuff That Interests Me with me, Dominic Frisby, and I am very, very excited about today's interview. We're talking Bitcoin, we're talking cryptocurrencies. My guest is a great friend of mine. He's been involved in alternative digital currencies and has been writing about them since the early 1990s, and he's central to the whole Bitcoin movement. He was CEO of the Bitcoin Foundation in 2012, and now he's chief economist with N-Chain. He is, of course, Jon Matonis. Jon, welcome to the show. Thanks very much for coming on.
Thanks, Dominic.
Another new high in Bitcoin today. Every day there seems to be a new high. We've broken comfortably above $5,000 a coin. How big, Jon, can Bitcoin get?
It is astonishing just to see that today on the way over here. It might have something to do with your program, so let's hope so. We are just taking baby steps on how big this can get. We're approaching 100 billion in Bitcoin market cap. We haven't seen $100 billion worth of Bitcoin as a market cap ever, so this would be a new high as well for Bitcoin. I think we're at about 88 billion right now. And the reason that people think it's big now is because there's a lot of zeros on the number. But what they fail to remember is back when it was $100, going from 100 to 1,000, or even from 10 to 100, those were 10x moves, just 10x moves. So for us to see a 10x move now from 1,000 to 10,000, or even in the market cap size, let's say from 100 billion, 10x would only take you to 1 trillion. It's entirely feasible, given the history of Bitcoin, that a 10x move would take us to a $1 trillion market cap in Bitcoin. Now, ultimately, this is going to reflect the amount of commerce that's done over the network, because the price reflects the amount of traffic that's being done over the network. This is what provides the liquidity. In order to do the higher size value transactions, you need greater liquidity. So I think it's way too early to call it a top. And if you don't believe me, go out on the street and just ask the average person on Oxford Street if they've heard about Bitcoin, if they have a Bitcoin wallet.
A lot of people have heard of it, but a lot of people don't have a wallet yet. On that note, and you warn me, every time we talk I always get sidetracked, but there are people who, if this was another market, if this was a mining bull market or something, there are people who are buying and selling Bitcoins and talking about Bitcoins who you would say are green investors. And normally when, the equivalent of the shoe shine boy. And when people like that are getting into a market, it's often a sign that we're at some kind of top. But it doesn't seem to apply to Bitcoin.
It doesn't apply because we're not there. Even to the extent that you see that, it might be FOMO, fear of missing out. But still, the wallet management, to be able to secure your own private keys and back them up properly, is still kind of geeky and techie. Average people have not gotten into this yet. Even though you see massive signups at third-party online wallets like Coinbase, they are instrumental in bringing in retail. But for people who are downloading their own wallets and backing up their own private keys, we are not there with the technology because it's not as easy to download as Skype yet. It's not as easy to operate for the average person.
So it will be as easy as Skype one day?
It will be, and you'll be able to do it on your own machines and on your own phone in that easy way. So you won't have to always depend on these third-party retail brokers like Coinbase.
What would make you sell your coins? I know you buy and sell coins all the time because you're a trader, and at one stage you were paid in Bitcoins. But I mean, what would actually make you a net seller?
Well, I don't do any day trading in Bitcoin. I don't think it's a commodity that is suitable for day trading.
It isn't?
I think it's
long.
It's definitely a buy and hold strategy. Unless you're an arbitrager, you could make money being an arbitrager. To be a net seller of Bitcoin really, though, just means that you don't have enough fiat to pay your bills. So in that regard, sometimes you are a net seller of Bitcoin inadvertently. But to be a seller of a substantial position of Bitcoin, you have to ask yourself, what are you going to be selling it for? Are you going to be selling it for fiat currency? And if so, why would you be selling it for fiat currency? Are you going to be selling it for precious metals? To get a gold position, and what's the rationale for exiting Bitcoin, which is digital gold, and going into analog Bitcoin, which is the physical gold.
So you're basically saying there's no rationale to sell it because it's going to get so much bigger?
Well, it's a philosophical change of mindset. Is you're not sitting there and looking at your British pound bank account, in HSBC or Barclays, and trying to increase that balance. You're holding the majority of your funds in Bitcoin, and you're spending them as you need to spend them. So there's really no exit event that you're looking for, because the new money for the new economy is cryptocurrency, and it is Bitcoin. So it's a transitional mindset. When you have that transitional mindset, then you don't fall prey to these bouts and periods where you feel like you have to sell.
Is crypto going to replace fiat?
Not immediately. It will challenge the fiat issuers at first, and they will coexist side by side. But for Bitcoin to replace fiat, it would have to attain the final and third phase of money, which is the unit of account function. Bitcoin has store of value, it has medium of exchange, and the third function of money is unit of account. This is when you see goods and services start to be priced in the numeraire, which would be Bitcoin. We are a ways off from that, because you don't go into the store and see the things priced in Bitcoin. You mentally calculate it based on what you see the fiat price. So we're a long way from that phase. And in the meantime, it's just going to be causing a lot of headaches for monetary issuers, especially monetary issuers like Venezuela.
Are central banks going to have to, are we going to start seeing blockchain-based fiat currency, if you see what I mean?
Well, we see attempts of it all the time in the news, but we shouldn't be inspired by that. These attempts are a little bit funny, because, first of all, they won't be decentralized. They most likely will not have permissionless mining. And most importantly, they won't have a cap of issuance. I can't imagine any central bank that's going to agree to an issuance cap. It violates what they exist for, is to have the ability for unlimited issuance. I think it's more likely that we'll start to see Bitcoin in the reserve portfolio of central banks. Australia has indicated this. So that means that alongside of dollars, euros, yen, they will hold Bitcoin in the reserve balance sheet of the central bank. Now, if a central bank were to do that, they would be able to issue currency that is partially backed by Bitcoin.
Are you familiar with SDRs?
Yes.
So just quickly to the viewer who doesn't know what SDRs are, they're special drawing rights, and they're an invention of the IMF, and they're almost like one SDR would be made up of something like, I can't remember the exact numbers, but it would be something like 50% dollar, 30% euro, 10% yuan, 10% yen, and 5% pound, something like that. In other words, it's a basket of fiat currencies. Will we see, and a lot of people at one stage were lobbying for gold to play a role, to be part of the makeup of the SDR. Do you think we'll see crypto play a role in the SDR?
We might. I mean, if it's suitable for a reserve currency basket, then it would be suitable for something like an SDR. I just don't think that the International Monetary Fund, the IMF, has that much of a role going forward. There are substantial implications of when we migrate to a crypto economy or a post-legal tender age. The monetary policy is taken away from the central bank issuer. So they have nothing to do. They end up with empty bank towers.
If the IMF had to invest its funds based on its predictions, it would long since have gone bankrupt. Now, let's talk about, one of the things we're seeing now, and it's incredible how quickly this has happened, is the ICO, initial coin offerings, the kind of crypto equivalent of an IPO. And they date back a few years, but the tide has really got moving since maybe the spring of this year.
Right.
And we're seeing, $80 million raised in 5 minutes for some new offering. And everyone is saying they're a bubble. Now, one of my definitions of a bubble is a bull market in which you don't have a position.
So true.
In other words, I'm not invested in that, therefore it's rubbish. Why aren't ICOs in a bubble?
First of all, ICOs, I want to say to the Austrian economists and libertarians who are a little bit down on ICOs, because in some cases even calling for regulation. But ICOs represent pure, undiluted, unlicensed capitalism. it's caveat emptor situation. You have to do your own research and you have to become an intelligent investor, not a lazy investor, when you're investing in these. We are only, I would say, 5 or 6 months into the ECO or ICO boom that started earlier in 2017. In fact, I went to a conference in St. Petersburg, Russia, which was about ICOs. And underneath the conference was a statue of Lenin, the famous Vladimir Lenin statue. So people are doing ICOs in Russia under the statue of Lenin. and capitalism is coming there. And we shouldn't shy away from this because it's another form of fundraising. And it hasn't encroached enough into traditional private equity or into VC yet to even come anywhere near calling it a bubble. So that's why I disagree with that statement. But go ahead.
Well, I was just going to say, aren't some of the companies that are raising money fraud, scams?
There's no question that companies are raising a significantly more amount of money than they actually need or even know what to do with. On the issue of some of them being scams,
where's the money coming from? Is this just Bitcoin profits being rolled into ICOs? Or?
Oh, Bitcoin and Ethereum profits. People who want to diversify from Ethereum holdings, because a large amount of these investments are going through Ether. Some of them are going through Bitcoin, some of them are going through Litecoin. But yeah, it's a diversification of people who made money in crypto. It's institutions actually getting in on a pre-sale so that they can benefit from the public ICO sale.
So it's not necessarily dollars going into crypto, it's crypto's kind of rolling further down the road, if you like.
In some cases it provides demand for the crypto coins to be able to get in there so that they can participate in the ICO. So in some cases that's what's going on. But I will venture to say that the percentage of failures that you see in the VC startup world, traditional VC startup world, is not going to be much different than what we see in the ICO world. I mean, they have a 3 to 5% hit rate on success. So sure, we see a lot of failures in that world. We'll see a lot of failures in the ICO world as well.
Okay. I mean, crowdfunding ventures often fail as well.
But I can tell you what's driving it, though. What's driving the ICO market is that, first of all, investors don't have a lot of rights. They're not purchasing equity in a lot of cases. In some cases they are, but not in all. But what's driving it is the investors notice that they can get a very rapid return because of the liquidity on the secondary market for these tokens. They can also get in at smaller amounts. So retail investors can get in where sometimes they're prevented from participating in a larger IPO. And these tokens act as digital bearer instruments. So they're like digital bearer bonds. You can invest in these without fully revealing who you are.
How many have you done?
I've participated in 4.
Okay. And when will you know if they've come good or not?
We'll know very quickly in the secondary market for these tokens. Yesterday we announced one that I'm participating in with a digital currency exchange called Globitex. And Globitex is attempting to bring the digital currency into the real world physical commodity market. So we'll be trading physical commodities for Bitcoin and for Ethereum. We'll also introduce a derivatives market. So we'll have futures and options for risk management and corporate hedging.
Okay, let's talk about some of the applications of these ICOs. Let's talk about some of the applications of blockchain technology, the future over, say, the next. I mean, how far advanced is blockchain tech? What kind of things is it being used for? How quickly are we going to see these materialize in our kind of day-to-day lives? Where are we and what are we going to see?
Well, we're seeing a lot of pilots and we're seeing a lot of proof of concepts at the larger financial institutions. So not anything in a production environment, at least with respect to the larger banks. So a lot of experimentation going on. But we're starting to see good inroads being made into the global remittance market. So there's apps that you can use on your phone actually to send money to other people who have that app. And the one I'm thinking of is an app called Abra. It operates like Uber for ride sharing, but Abra is an app that you have on your phone for exchanging in and out of Bitcoin. You can go any country to any country once they roll out the service to those other countries. We're seeing great applications in online gaming. The online gambling market is always one of the industries that gets exploited with new technology. And it's a great fit with Bitcoin as well, because you remove the problem of the payment provider in the unregulated gaming markets. Then when you go to Ethereum, you're seeing incredible innovation around the smart contracts. The ERC20 sub-protocol within Ethereum is what's responsible for all of these new crypto tokens that are being issued through ICOs. And you're seeing a flourishing of activity on what we hope to see in the future on that, in the P2P lending market especially.
So can you give me an example of something that we will see in our everyday lives in, say, 5 years' time?
We'll start seeing things like when you rent property, or when you purchase property, when you own property, you will be able to, because of blockchain technology and cryptographic protocols, you will be able to subdivide your ownership in a house or your ownership in a flat to be able to open it up to wider participation. So you might only be the 20% owner who's living there, and instead of getting a traditional mortgage, you've essentially crowdfunded the rest of your mortgage. These things are on the verge of happening, and they're already in the planning stages. A company in Camden is starting this.
Okay, now a lot of people say Bitcoin is, we're in the 1990s, and Bitcoin is Netscape Navigator, and Google hasn't been invented yet. You dismiss that argument.
I dismiss that argument just as I would dismiss it for being the MySpace Facebook argument.
Okay.
And it relates to protocol battles. Those are social media platforms, and what we're seeing with Bitcoin is a protocol battle. A protocol battle just as we saw with TCP/IP, protocol battle that we saw with SMTP for email. And in a protocol battle, what matters is not what is best and most elegant, but what can be early to market and achieve a dominant network effect. And the network effect becomes this incredible force that makes it so much incrementally harder for any challengers to really take that dominant lead. And so what that portends for the future, though, is that we are all going to be building and expanding on the P2P network protocol that is the most pervasive and the most dominant, instead of trying to create another one that's more elegant.
Okay, so SMTP is the protocol by which we share emails with each other.
Correct.
And way back when, I think there were like 13 different protocols.
Or more even, yeah.
Okay, and by virtue of the fact that SMTP was the protocol that everyone decided to use, that's why that was the protocol that won. And the same thing is happening with Bitcoin. So there might be a better one, but it's just the fact that Bitcoin is the one that everybody uses.
Right, and you can think of it as MOIP, Money Over Internet Protocol, so just like voice over IP. Mm-hmm. It's at that level. That's what has investors excited about Bitcoin. The other thing that they see is you're able to invest in the cryptocurrency as a proxy for the entire sector. So it's like buying an ETF on the entire sector. You don't have to take the risk of investing in a solo Bitcoin company with a management team. So
by investing in Bitcoin, you are investing in the internet.
Yes.
Okay.
The future of the internet.
Now, you've said this in public, I believe. While you're very bullish about Bitcoin, you think it's going to get much bigger, you're less bullish about Ethereum. You think Ethereum will eventually die.
Well, we've never seen a cryptocurrency completely die. It has a slow march towards 0.0001. But Ethereum has a significant number of challenges ahead of it, and I don't think all the investors fully realize this. The first challenge is their stated argument to migrate from proof of work to proof of stake. They haven't articulated a firm timeline for that. With almost a $30 billion market cap in Ethereum, proof of stake consensus system has never been attempted on something so large. So in my mind, it would be foolish to even attempt that. The second thing that they have going against them is that there's no controlled supply of issuance. Whereas Bitcoin will cap out at 21 million in total Bitcoins, Ethereum does not have a similar cap. So as an investor, you have to also understand what the mechanics are behind increasing the amount above whatever the given cap is at the time. And you can read a paper on this. Ethereum doesn't hide the fact, but it's a process where they don't have a cap; they exceed the cap. And the third thing is a little more nuanced, and it has to do with the smart contract technology and the language behind Ethereum, which is called Solidity. This is what was largely responsible for the explosion in the DAO, the DAO, when we saw the hack of that last year. They still cannot deterministically prove that something like the DAO cannot happen again in the future. So they've made some patches. They forked Ethereum into Ethereum and Ethereum Classic to roll back that hack, and that's what we have with normal Ethereum today. But I still maintain that they cannot deterministically prove that it won't happen again in the future. All of these things would make me a little bit nervous as a long-term Ethereum holder.
Now, we live in London. Our wonderful mayor in London has declared that Uber can no longer operate here. And just before we did this interview, we were having lunch, and you just said, well, as soon as Uber starts using Bitcoin, then it won't be an issue. The mayor can't stop it. Tell me about that.
Well, our mayor, first of all, probably doesn't care about re-election if this is the stance he's taking, but we can solve all of these problems, and Uber can solve all of these problems if they go to a decentralized payment system. Because one of the problems I've always had with Uber from the beginning is that they know where they're dropping you off, and usually it's your home or your work. And then they also know your name through your payment system. Now, that's the first benefit of decentralizing is that you won't have to give your name to the Uber company.
But he will still know your reputation as a passenger.
He'll know your reputation, but he won't be able to match names with addresses. That's not the main problem it solves, though. The main problem that it solves is that you won't have the payment network actually being the weakest link in the entire chain, because right now there's nothing illegal about making an app. It's just an app on your phone. And if two people have an app and they're using it, and one person says, well, I'm going to swing by that area of the neighborhood, I can pick you up. I mean, that's mutual consent via an app. If that's all facilitated through Bitcoin, then there shouldn't even be anything illegal about it. The next step further would be to even create a decentralized protocol for matching the Uber driver with the Uber rider. And all kinds of these innovations will come up if they start cracking down further on Uber.
So they will lose control of their licensing power, effectively, as a result.
It will be rendered irrelevant.
The implications, the libertarian implications of Bitcoin and blockchain and all these cryptocurrencies, and the way they are just subverting the power structures in the West is wonderful.
I would say that they are seeking the rent-seeking intermediary in the middle, and they are making them irrelevant.
Death to the rent seeker. Jon, on that note, thank you very much. If people want to find out more about you and what you do, they should follow you on Twitter.
They should subscribe to my Twitter feed. It's a wealth of daily info, and it's at Jon Matonis.
Jon Matonis, thank you very much.
Thanks, Dominic.
And thank you very much, folks, for listening and for watching. Please share this show with as many people as possible. Please rate us. Please review us. Please do all the things that you're supposed to do. And hopefully Stuff That Interests Me will grow to be as big as the Bitcoin protocol itself. I'm Dominic Frisby. I'll be back with another episode at the same time next week. Thank you very much.